everyone! Welcome back to my channel. For those who are new, please don't forget to like, subscribe, and comment below. In this video, we will discuss about additional funds needed. I will give you sample problems and step-by-step solutions. Enjoy the video. Here's the reference book used for this video. Some details about myself. Okay, let's begin. Every business has three primary capital sources. We will focus on the third type, which is the AFN, or additional funds needed. Let's have a recap of the AFN equation. This is the amount of external capital, or interest-bearing debt and preferred and common stock, that will be necessary to acquire the required assets. Let's start with problem number 1. Please read the given. Here's a summary of the solutions to problem 17-1. On the left side, you will find an Excel template which I've created where all the information given was input and it automatically computed the required additional funds needed, which you will find it below. The solutions can be found on the right side of the page. Let's start by computing the net income required and dividends for 2018. We were given profit margin of 3%, which will now compute the net income. So 3% multiplied by the total sales for 2018 will give you 150,000. And for the retention rate, which was given at 30%, we will use this to get the payout or dividends payout ratio, which is equivalent to 1 less 30% and will give you 70% or 0.7000. To get the dividends, multiply 0.70 to the net income of 150,000, it will give you 105,000. The target growth rate in sales for 2019 is given at 20% or 0.2000. We can easily solve for the rest of the requirements. Please check the right side of the page to get the solutions for the answers. Kindly note that in getting the spontaneously generated funds, we did not use the entire 1 million of total liabilities. We have excluded the notes payable because this is not part of the spontaneously generated funds. We can only include the accrued payable, which is 250,000, plus the accounts payable of 250,000. After all those computations, we can now compute our additional funds needed. We can easily get this by deducting the spontaneous increase in liabilities and the increase in retained earnings from the projected increase in assets. This is equivalent to 600,000 less 100,000 less 54,000, which will give you an AFN or additional funds needed of $446,000. Please note of the solutions on the right side of the page. Let's now proceed to problem number 2. We refer to 17-1, however, the assets is now increased to $4 million from $3 million, while the rest of the information remains the same. We can easily compute for the requirement for problem number 2 by substituting $3 million with $4 million, and the Excel template will easily compute for the required AFN. The increase in assets from $3 million to $4 million also caused an increase in capital intensity ratio from 0.60 to 0.80%. With this, the projected increase in assets has also increased from $600,000 to $800,000. All of the changes are highlighted in red. As you can see at the bottom that the AFN has increased from $446,000 in problem 17-1 to $646,000 in problem 17-2. There is a difference of $200,000. It is important to note that increase in assets is dependent on the growth of rate in sales. Let's now solve problem number 3. Let's refer to problem 17-1, and the only difference is that there will be 0 dividends in this situation. In solving for problem 17-3, we use the Excel template that we used for 17-1 and only remove the dividends and mark it at 0. The changes are highlighted in red. Dividends is at 0, and with dividends at 0, the retention ratio is equivalent to 1 because the payout is 0. Since we did not give out any dividends to our stockholders, it means that the increase in retained earnings is higher. From 54,000, it is now 180,000. With this increase, the result for our AFN is equivalent to 600,000 less 100,000, and the new increase in retained earnings, which is 180,000, the equivalent AFN is equals to 320,000. If we compare among the three problems in 17-1, where the assets is only at 3 million, the AFN required is $446,000. When we increase the assets, we also need to increase our additional funds needed. It is now at 646,000. However, when we retain our income and did not give any dividends to our stockholders, our additional funds needed has actually decreased, and it is now only at $320,000. This is the end of the presentation. I hope you've learned something from my video. If you have other requests, please comment below. Have a great day!